Hi, this is Mike, and we're looking at the Bitcoin chart. So, what an interesting night it was with the reversal at the highs. There's lots to talk about here in this video, and I want to start by showing you the internal count for this. And even though it didn't tap the low where I said I'd show it, I'll do it anyway, just because I can't help myself. So, what we saw when this drop occurred was a wave one down, right? Wave one for the coming move down for wave C of a zigzag, right? So what happened in the beginning was we saw a little wave A, B, C, D, right? Now this pattern only occurs in this order at the lows when a market is just pulling back after a five-wave move to continue down, okay? To continue lower. The thing that happened after that was this incredibly massive wave E that ended the correction. So if you picture these little A, B, C, D, E's at the lows, right? This one up the top, up the high here would have to be made bigger for you to understand what I mean by that, right? So in my mind, I was fairly sure that we would see price eventually reverse down. Now, did I think it would go all the way that back up to the highs the way it did in the manner that it did, even creating fake looking wave ones in the process? This is the trickery of the markets, right? And to understand this pattern is to understand the big deal here, right? At one point, I thought this was the top too because it was a zigzag like the first two moves up, 1, 2, 3. I think this might even be 2 down here potentially, right? So you got alternation between wave 2 and 4, massive alternation, right? But it's to the point where this looked like it could have been wave 5, except no, Bitcoin had other plans, right? And rightly so. The amount of mania that we've seen in this market over the last couple of weeks, even couple of months, has shown itself on the chart as being mega bullish, right? But the thing about knowing the waves is that you get to anticipate certain moves at certain times because the framework dictates that patterns can only occur in a specific order, right? With specific variances of each wave component. And once you get the practice down, you start to see these patterns unfold in a way that gives you clues as to what's happening, right? Which is why I posted that video saying that knowing the waves gives you confidence, because there were so many people who were mega bullish during this whole time thinking, oh, this is I don't know, a teacup and handle with a long handle, or it was an inverted head and shoulders, or it was a this, or it was a that. Whatever reason they could come up with, they would come up with it because they're mega bullish, right? But unfortunately, we had a reversal. And this reversal counts as the next wave one down, right? Not the one that happened back here, the one that happened here. And now this is not a zigzag either, in case you're thinking that, right? I'll explain what I believe we're seeing right there. Okay, so I'm probably going to use the wrong color here, but I'll switch it up actually. So here we have a wave one, right? A green wave one. This is what I thought was happened back at the first drop, right? So wave one's here, right? And what we have then is we have A, right there. We have B, we have C, right? And then we have a D. Now, normally the D is a breakout wave, but it couldn't quite extend that low because guess what? Wave E again was a bit longer and still feeling the bullishness after all that bullishness. Okay. Now, whether it ended there or it's still got a top out one more. I think maybe one more top out because the pattern here suggests it might do so. Might do a little spike up and then reverse because the bullishness is back, right? After that reversal, but it's a sign. It's a sign we broke previous wave 4. Well, we broke the previous impulsive moves, the start of it, right? Really, we needed to go down to this level to confirm. But nonetheless, this looks like a correction for wave 2. So from here or from wherever it spikes up to, we just got to keep an eye on that. It's come back to retest this area. That's fine. So for me, that's that. Another thing I want to show you is I just adjusted the count, right? I just adjusted the count for the move up, which is also wave E, obviously. So this wave E at the lows here is basically the same pattern as what we're seeing in a larger degree, right? I just want to basically indicate that my count here has changed a little because I've observed this pattern on Ethereum, and I believe what happened is right here. We have a B, and then a CD was here, not here like I thought before. This cannot be made into a zigzag. So this here is a CD, and then E starts here. Right now, the thing that's interesting about this pattern, in my opinion, is that the zigzag wave D in wave 2, right, was expanded, and so was the zigzag in wave 4, right? So, sorry, both corrective waves, the wave D in each correction expanded. It was bigger. It was bigger than every other corrective pattern, right? That's the only interesting thing I can see about this pattern that makes it unique. But at the same time, that's what gave me the clues at the highs that the top was in, the way that it reversed after that move was made. Okay, so there's clues at the highs, which I had to think quickly that day when I decided to short right at the top, right? And although I did short at the top, because it's interesting that some people like to comment on what I say and things like that, and I'm just honest, right? I shorted at the highs and I let it all come back up, right? Now, why is that ridiculous? Perhaps, well, think about it, right? Pullbacks don't always come up almost 100%, right? They don't always come back that far up and last this long, right? So if I had I don't know, thought that maybe the correction had ended here, there's a few spikes down where people would have assumed that it did end, right? I would have got basically wiped out. Okay, so letting it come back the way I did prepared me for the drop ahead that's going to go even lower without having to risk not being in the trade in case it did go down earlier, right? I don't know if you can see the logic behind that, but it's like you really need to know the waves in order to do that. And I just thought, you know what, I'm pretty sure about this. I'm just going to hold on. And then what made me even more sure was what I was seeing at the lows was consistent with my idea. It's just that I didn't anticipate this wave E, which is fine because my stop was at the highs. So it's irrelevant, really, right? So to say that type of thing is just trolling and clown talk, right? And there's a lot I have to say about that, but I don't know if I'll have time in this video. The only other thing I wanted to point out here is something interesting that obviously still hasn't been confirmed. We're still waiting for a move lower to confirm it, right? But I just want to say one thing. If this pulled back almost 100% to the highs before reversing lower, think about that for a moment, right? Bitcoin's in a bear market going down could go all the way to 3,000, right? Now, will that correction be as bad as what this pullback has been? Right? This goes to show you that markets can pull back in wave 2 almost up to, can't be 100, 99%. It can. It can and it will, right? And at the moment, I believe we are in crypto depression, crypto bust, call it both, crypto depression bust. Some people are depressed and projects are going bust. Doesn't matter how you look at it. It's not good. But I'm going to track it the whole way. I have a good idea because I created RS wave, and my methodology can understand the waves that are going to occur ahead of time, so I can get ready to take profit and then trade the next move. Okay, so you can either come along for a ride, or you can just clown around and troll. It's up to you. I like to make money. I don't come here for fun. I don't come here to make friends. I come here to make money. Okay, so just understand, the same people who don't believe pullbacks can go back this far are probably the same people that are long. Now you think about that for a moment, right? Too many people are on the wrong side of the trade because they don't know how markets work, right? And a lot of people will dodge questions about price because they don't want to reveal how much they don't know, or they're too chicken to produce or to give a price target in case they're wrong. They're too chicken, right? And just to add a little bit more to that, because why not, right? You've got a couple of different people here. You've got people who get in at the lows, and you get people who get in at the highs, right? But a lot of them have one thing in common. They don't know what the cuff is happening, like a lost kid at a carnival, right? So the term hodl was created by people that have no idea how waves work. They are quite simply hiding their true feelings in an acronym, sounding like what someone would say. That sounds like what someone would say if their sailboat went off a cliff down a waterfall. Hold on for dear life. That means you don't know what's going on, right? And trolls and clowns, they're just angry at the market because they themselves will blame anyone but themselves for losing in the market and need somewhere to vent their frustration. So when you troll me or anyone else, you're digging your own grave, because when your emotions have the better of you, you always lose in the markets, right? Markets gobble up emos like the Hamburglar. I also use them as a contrarian indicator. So when the clowns show up and you're long, better take another look at the chart because you might just be wrong. So hopefully you found this video interesting and informative. Thank you for watching.